QuickBooks Pro Desktop 2021 Journal Report. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars practice file. We currently have the open windows open. You can open the open windows by going to the View dropdown, selecting the Open Windows list. We're now going to take a look at the Journal Report. First, we'll take a look at where it is. Then we'll give a little discussion on it. Then we'll open it and go into it in more detail. So it's going to be under the Reports dropdown. We are in the Accounting and Taxes. We're taking a look at the Journal Report. Like all other reports, the Journal Report will be adding to the information of or expanding on the major reports, that being the financial statement reports, the balance sheet, and the income statement reports. When you hear journal, you're basically thinking journal entry. That's going to be debits and credits. So we're recording the debits and credits or breaking out the transactions that have been recorded in terms of debits and credits. This is another report that can be quite useful for like a billing type of process because it's going to be showing the activity over a certain time period, just in a different format. But you still can break out the activity rather than by account that's affected, by date that is affected, and it'll give you a more detailed look at it. Now, note that when you enter the transactions into the system, you're typically using these forms to enter the transactions. The form then makes the journal entry and basically records it on the financial statements. But we often don't see the debits and credits when we're using these types of forms. It's just the debits and credits are still there, but QuickBooks doesn't really show the debits and credits. The journal will show the debits and credits. So if you're comfortable with debits and credits, or if you want to learn debits and credits better, if you want to look at a complex transaction such as a payroll transaction and see what it looks like from a debit and credit format, this is a great tool for that, and I highly recommend doing that. Look at these transactions that are being entered as you enter them. Take a look at the effect on the financial statements, balance sheet and income statement. Drill down on those to see what the effect is on each account by drilling down to the transaction list by date, basically auditing back to the source document, and then think about it in terms of a journal entry format, and you can do that with a journal entry report such as this. Let's do it now. We're going to go to the Reports dropdown, Company and Financial. Let's open up our financials first. That's going to be the balance sheet, down to the balance sheet standard. I'm going to change the date and the customized reports up top from 01/01/21 to 02/28/21. Go ahead and run that one with the OK blue button. Then Reports drop down, Company and Financial. We now want the Profit and Loss Standard. Going to change the dates up top from 01/01/21 to 02/28/21. So note, if you were to enter something such as, let's say, an invoice, and I wanted to see what happened, what you want to do is I would say, look, here's the invoice. I'm going to enter the invoice and think about what's going to happen. I know that the invoice means accounts receivable is going to go up and the other side is going to go to sales. Then I'll take a look at that from the end product, go into the balance sheet as we've seen in the past. Here's the accounts receivable. If I double click on that, I get the transaction list by date, and I can say, okay, here's the invoices basically increasing the accounts receivable as would be expected. The other side, I can close this back out. It would be on the income statement. So I go to the profit and loss just to see what's happening here. I'm going to go sales, and I can see the invoice here on the other side increasing the sales item. So then I might want to say, well, what's going on with the debits and credits? What if I was to see this in a debit and credit format? What would that look like? Well, we can go, okay, let's go to the Reports dropdown. You can go to the Accounting and Taxes and take a look at the Journal Report. The other way you can get into the Journal Report is to go to the Reports dropdown, the Report Center, and then maximize. I like to maximize the Report Center. I don't like when it's not and then we're going to go to the Accounting and Taxes, and then we want to look at the Journal Report, which is right here, the Journal Report. That's the one. Let's run it. Let's run that report. I'm going to say OK to this window that pops up. And then it's going to go 01/01/21 to 02/28/21. That's going to be the range we're looking at. And now you can see these activities by debits and credits. So we have the type of activity. So again, this is really nice, to tie out what's happening in terms of the transaction lists and then in terms of seeing it in journal entries. There are, journal entries are still the driving component here. They just try to basically not show the journal entries to people that don't want to see the journal entries, but it's really useful to look at them in this way. They're actually a lot easier to use for building blocks if you understand the journal entries. So if I was to look at something like a deposit, then that, of course, on the form would be this item, this deposit form, and you could see the effect on the income statement, and then you can go over here to the journal and say, okay, here's going to be the debit increasing the checking account. So when the checking account increases, it increases with a debit because it's an asset account, increases with a debit. The other side's going to the owner investment, and that one's a little bit more confusing. You might say it's crediting owner investment. Is that increasing or decreasing owner investment? Maybe, it's a little bit more confusing. That's an equity account. So if I go into the owner investment, like the balance sheet here, and I say, well, let's look at it. What did it do to like my balance sheet? And I go into the owner investment. It's the only thing in there, so it looks like it increased the owner investment. So a credit increases the owner investment because that's a credit account and it goes up with a credit balance. So if you want to know more about the debits and credits, or just brush up on your debits and credits as you go, which is always a good thing, then you can use this report to do that. Also, it lists the information by type of entry that you have input as well as date. And it kind of expands the entry. So if you're using this as a billable item, once again, you can count the number of transactions. You could say, hey, look, I'm going to bill someone not by hour, but rather by how many transactions have taken place within a month or within a week or within whatever the billing cycle is. And that can be, and then if you provide this report to somebody, you could say, hey, look, these are the transactions we recorded. Checks and deposits, these invoices and whatnot, and I'm charging you by how many transactions are within this time frame. And you might even break it down by, charging you by how many transactions and how detailed the transactions are. And this report's a little bit more impressive than the other report you might use, which is the transaction list by date, because this expands the activity of the transaction, so it looks a little bit more, impressive to look at this report. And also if you go into a more complex type of transaction, such as an invoice, remember when we looked at the invoice, we were bouncing all over the place in terms of how is it recorded. If I go into, say, the balance sheet and I look at that invoice again, and I go up, I say, I know accounts receivable goes up with an invoice, and let's open up an invoice here. So I'll open up one on 115. So let's open up that invoice. I'm going to say open up. Now, we know that this is going to affect a lot of accounts. An invoice means accounts receivable is going to go up. Then the sales are going to go up. Revenue by the $420. The sales tax is going to go up by the $20. And also, if I'm tracking inventory is going to go down. And then the cost of goods sold is going to go up. That's a lot of accounts to kind of bounce around on. You can't even see it, that what's happening on the invoice, But if you go into the journal report and you get kind of confused on what's happening in a transaction, it'll actually tell you in debit and credit format. But it's still listed out. Even if you're not comfortable with debits and credits, it'll still list out all the accounts, and then you can go to the actual financial statements and see what happened. Did it go up or down with whatever debit and credit hit it? It'll actually list the accounts per transaction by form, the form you'll typically use to actually populate the what you need, so that the system can use that information to then create the financial statements. So here it is. Here we got the accounts receivable increasing, sales increasing, sales tax. I would usually pull that up underneath, but they put it down there. And then and then the inventory goes down with a credit, and the debit to the cost of goods sold. So notice most transactions have like two accounts affected. So if you're just entering month end, writing checks or entering bills, then all the payments have two accounts affected, and those would be a standard. If you're going to bill for them, those would be standard rates. If you're dealing with inventory, then your sales items, maybe you have a different rate for them because you got to track inventory. They're a little bit more confusing, although once you set up the system, they're really easy to input. That's the point. Inputting the journal entry is not difficult. Setting up the system to put in the items correctly so that the data input is as easy as possible populates the financial statements without even knowing what you're doing when you enter the invoice, just doing data input. So it's not too difficult to follow. These are the ones that are deposited with the undeposited funds at the other side. And then the other one that's going to be a confusing transaction down here is the paychecks. So paychecks, most people don't understand payroll and how payroll works and all the detail within payroll. So if you're running payroll within the QuickBooks system, it's worth your time to go through it and think about those transactions, because like I said, it can be really useful. There's often whenever there's a problem, many of the problems that will take place with liability problems happen with employees, often with relation to the payroll. So if you have an understanding of what payroll's going on, you can help out with those problems. So you can go in here and you can actually look at the debits and credits with regards to the payroll. So payroll's another one of those items. If I go to the home tab we enter the payroll here, and then we pay the payroll liabilities here. When we enter the payroll, just looking at the check stub, we had to bounce around all over the place to know, what's actually happening with payroll. We know that, okay, well, we know that there's going to be a decrease to the checking account, and then we know that there's going to be a payroll expense, but there's a difference between those two because we had to withhold money, and then we're going to have the withholdings for Social Security, Medicare, federal income tax. What does that look like in terms of all the accounts that are affected? Well, if I go to the journal entry here, it'll break that out for you. So here we have this this transaction that could be useful. Here's going to payroll expense, and this one's going to the liability that we're taking out. That's the federal income tax we're removing from the check. We have then the payroll expense for the employer portion of, it looks like, Social Security here, and then we have the liability increasing for the payroll taxes, which was going to be Social Security for the employee, and then the employer portion, and then we have the debit to the payroll expense for the employer portion of the Medicare, and then the employee and employer portion increasing the liability accounts. And this can get a lot more complex when you get the state taxes in there and whatnot. So if you're billing, of course, for payroll, you got to charge more for that because you're going to have to buy the add-on feature for payroll. And so you have to set up the payroll. And then this can tell you, of course, how many payroll transactions are taking place within the system as well.